Hey guys, welcome back to the channel. I hope everybody's having a great day. Definitely, before I get started, please like and subscribe. Greatly appreciate all the support. So let's get started with the markets today. So all the major indices closed lower today. The Dow, the Nasdaq, the Russell, and S&P 500 all closed down. And the S&P, the Dow, and the Nasdaq actually closed down for the week, but the Russell closed with a slight gain of about a 1.5% gain for the week. Now, the reason for most of the sell-off today was we had some abysmal retail data that hit the tape. Uh, Retail sales have fallen off a cliff, and that's never a good sign for a consumer-based economy. I mean, most of the economy in the United States is services-based. So if services aren't open and people aren't spending at retail, I mean, God only knows what the GDP number is going to look like. So that was a terrible miss, and the numbers are likely going to get a lot worse before they get better. We still have a lot of cases of COVID going around, especially in the Los Angeles area and just all throughout the country. And a lot, there are different places around the country that are in lockdown still, and not many places are open. So yeah, I mean, the retail numbers were disastrous. But now, from a market's perspective, and mainly from my opinion, the markets are still going to go higher. The markets are already disconnected from reality. The markets live on their own planet, okay? Now, the real economy is screwed, but the folks on Wall Street, as long as the Fed and the fiscal authorities are pumping in trillions of dollars, yeah, the market is going to stay elevated for longer than people expect. So, from the market's point of view, yeah, the markets look a little bit overbought and we had a little down week, but the trajectory of the market is higher. Next week, I expect some type of rally, because, hey, we have a new incoming president, maybe less drama with China and so on, less tweeting in the middle of the night, things like that might get market sentiment back. And also, Joe Biden today reiterated his plan to tackle the virus. So he came out with a pretty bold plan. He wants to get about, 100 million people vaccinated in the first 100 days. That's a bold plan, but I hope we're able to do so, because, I mean, the faster we get through this health crisis, the faster we can get the economy and everything else open. So that's pretty much the key takeaways from today. But as far as next week, we have the new incoming president, we have the new incoming Congress. All eyes will be on stimulus talks. We have some moderate Republicans that are on board with the remaining $1,400 to make it $2,000 checks. Now, all the other spending, as far as relief and testing and relief to small businesses, that's all going to be negotiated. Joe Biden had an ambitious $1.9 trillion package. Something tells me all of a sudden a lot of the Republicans that were spending like drunken sailors the past 4 years are now going to flip to be fiscal conservatives. So yeah, I mean, there's going to be a battle, but that's going to be key for the markets. Maybe even if it's not 1.9, maybe 1.5 trillion, and then likely after that is going to be some type of infrastructure spending. So that stimulus and that infrastructure spending is going to be key to keeping the markets up, because the next few weeks and months, the economic data is going to be terrible. I mean, we might even get a negative GDP print come first quarter. So it looks pretty grim out there, but there will be light at the end of the tunnel. But right now, yeah, it's pretty dark. Um, but anyway, I'm gonna do a markets look ahead over the weekend, more in depth to see any news that happens over the weekend. But again, please like and subscribe, and I appreciate all the support. Thanks.